After a weak start to the year, gold has shown glimpses of life throughout January and could be closing the month in the green. The question now is whether the bears are going to take over during February off the back of the recent FOMC meeting. Welcome to our market analysis videos here at ZenFinex. For those who are new to the channel, my name is Connor and I'm the senior market analyst at the company, providing to you these daily videos on market analysis and also educational content. For today's video, I'll be giving my forecast on the gold market for February 2022. To do this, I will mention the key news events to watch out for before jumping on the chart and marking potential trades. Okay then, so let's recap on January first of all. Gold actually started the year quite weak actually, and at one stage this month gold was down 2.5%, carrying on their woes from 2021. However, the gold price had turned around until yesterday. At the time of recording this video, at the moment gold is sitting at around $16 per ounce. The reason for the bull run is down to potentially investors using gold as a hedge against falling stocks and cryptocurrencies. I'm sure you've seen in the news the fall that we've seen in those risk assets. The FOMC meeting yesterday, however, did change quite a lot for gold. So with that being said, what can traders expect for February? Well, if inflation concerns continue to put pressure on stocks, then yet we could see traders hedging a bit more. This can easily prop up the price of gold. However, stocks have fallen at a much faster rate than gold has risen. So I think that says to me there are more factors in the background that are pressing gold back somewhat. One of these, I think, is the dollar, which moves, of course, inversely to gold. The surge continues in a market pricing in several interest rate hikes in the US, and until the dollar cools significantly, gold could struggle for some real bullish momentum. But the main one for me is the hawkish Federal Reserve stance, which I said at the start. Yesterday was a huge day, I think, as Jerome Powell spoke out on interest rate hike timelines. Did we learn anything shockingly new? Not really, but the meeting was hawkish. The meeting has led many to expect more monetary policy tightening than previously expected. He did manage to dodge questions on whether they would hike in successive meetings this year, which does actually leave room for more hawkish conferences in the future, with some saying that is definitely on the cards. Either way, this hawkish stance lowers the chance of negative real rates, which some claim were actually keeping gold higher. Now, is there any really saving grace for gold in February? Well, gold is still a safe haven asset, and it could still be boosted by rising geopolitical risks. And we've seen the potential Russia invasion of Ukraine, in which tensions there are very, very high indeed. But as a whole, I do see more bear factors than bull ones, to keep it simple. So I am more inclined to sell this market if it shows a clear break of structure to the downside. The bull case target for me is $1,900 per ounce. That's the maximum for me. I'm a lot more wary of a quick recovery in equities, potentially bringing gold's stronger issues right to the forefront, which could mean the bears take over again. Let's try and mark a trade on the chart for us. Okay then, so on the chart for this gold market now, and as you can see, we are still really, if I go on the daily chart actually, we are still really struggling to see some clear direction in terms of where we're going for this gold market. And it's been a theme of these videos, but we can still see some trading opportunities. So the way I'd like to play gold for now is I'd like to first of all go through quickly a bull case, because it's not the one I particularly fancy, but we do have potentially the 200-day and the 50-day moving average, which are together at around that 1800 level, potentially acting as a support level. So maybe we're going to see first of all a move down further down into that 1800 level and see a retest of there, and then we could snap back. Let's say geopolitical tensions rise throughout February, and this could cause the market to go up towards this 1875 level. And I always think that the way I look at it is the big players like to buy to sell and sell to buy, is what I like to call it. So if I actually mark these key, which I think are key liquidity levels, this is our buy side one. and I'll copy and paste that, and we're gonna show some liquidity which is sitting on the sell side as well. And these really are going to be our targets. So my target, if I'm going to be looking to buy the market, I did say I see 1900 as the absolute maximum, which is all the way up at the swing highs from June 2021. Don't see that being too much of a problem. If we do reach there, then that's fair enough. What I see happening more likely is we get a move towards this 200-day moving average. Perhaps we then look to in the first half of February, maybe look to go up to this 1870 level, which is where we have this liquidity sitting. This pool of liquidity will be a target for any of the big players to actually sell from. So if we can get the chart, as you can see from this arrow, if we can get the price actually moving up and taking liquidity to the top side, I see this and any snap reaction down as a signal to sell. We look for the retest, and then we sell down towards our take profit level. And my level that I think that we're going to be seeing for February is actually this level that we have down here as well. So I can actually move this to more of a take profit looking line. Take profit for Feb. And that's what I see happening in this gold market. That's my strongest play on the daily chart as well. If I just quickly get on the relative strength index, because it disappeared on me. What you can see here as well, we are actually in what it is exactly what the chart is saying. To be honest, we are in this kind of limbo moment at the moment. Price is quite balanced. I actually thought it was quite significant that we saw the market actually fill the price and efficiency that we had here from the drop in November. That's now been filled, so there is a chance that we don't get this bounce up and we don't actually take liquidity on this side, but instead, if you want to be slightly more aggressive, we actually might want to think about taking liquidity on this side instead. So we can move this down. Again, it's important to wait for the market to wick into this level, taking liquidity above this high. We want to see a snapback down, maybe on a lower time frame like the hour, 4-hour chart, on the hour chart, something like that. And then we want to sell on the order block that's left behind from here, and then we can go looking towards that 1750 level. So for me, it's waiting for the structure to show its clear hand. We may actually just see the rundown and we see this clear break of this 200-day moving average straight away. But as you can see, it has been just kind of yo-yoing between and up and below. So I'm a bit wary of using that as a solid way to trade, but 1750 is my target for February. If you've enjoyed this video, everyone, make sure you like and subscribe to our channel. Give it a thumbs up. Drop your comments in on the comment section as well. Anything you can do to help boost the channel, we do really appreciate that. I hope everyone has a great month trading gold. Drop me any messages, even our Discord channel or something, if you want to know my updated opinion on this. But this is what I'm seeing for February so far. Hope everyone has a great trading day and take care.